Okay, so welcome to webinar. It's Monday the 4th of July. If you're watching the recorded version of this, it was held live at 12:30 lunchtime on the 4th of July. Before we start, as usual, we'll just put that risk warning up there. So what we're going to do this week, this is the second market outlook webinar that I've done with Aondo, and we're going to do them on a regular basis. This week we'll have a look at really what's happened over the past 7 days. We saw those enormous moves across all sorts of markets, particularly stock markets and the pound, after the UK voted to come out of the EU a week last Thursday. And we've seen maybe some calm return to markets, so we'll have a look at maybe some of the levels to keep an eye on in the days ahead. So without further ado, I will flick over to the trading platform and we'll take a look at some markets. Here we go. So the platform I'm using is Aondo's Trade Hub. So I've got just a nice simple watch list up that will help me just flick through some of the charts. So let's start off. I mean, clearly the pound has been in focus an awful lot. Let's take a look at the pound. I think it's something of a mixed picture for the pound after those moves that we saw. When we looked at this last week, this time last Monday, I was saying the sort of the 132-ish area was a big one, because that's where the pound had fallen when we had that sort of shock referendum result come through. Let's just flick this out to a daily chart, and it just seems to be, I think, somewhat undecided. I think at the moment that was the move on referendum night and in the morning, and on the Monday it did push a little bit lower, but we haven't seen that much follow through, and it's been relatively quiet trading, and I think it gives us a really obvious level to watch now. There was an interesting comment this weekend. I think I put it on my Twitter feed. It was from Bloomberg, the news service, and they've interviewed, I think it's something like 32 different economists, and every one of them thought the pound was going to be lower by the end of the year. Some calling for it to be as low as sort of 125, so another, what's that, would be 700 points below where we are now, maybe 5% lower than where we are now. And I do tend to think it's quite a well-known sort of maybe a bit of a market cliche, but when everybody thinks a market is going to move in one direction, that's precisely the time it starts to move in the other. So I can't help feeling it does maybe add a little bit of weight to the view that the pound has gone low enough for now, and maybe the path of least resistance for pound against the dollar anyway is upwards. Saying all that, it's not actually done much over the past week. You know, if we look at the lows from the 27th, I think that's the big level to watch. So just ahead of what 131 sort of 13100, let's say, that sort of level. If we have a quick look on here, this is, I think, is the big level to watch going ahead. And we have seen, when it's dipped down over recent days, we have seen, you know, a bit of an appetite for buying. That was the end of last week, 28th of June. And again, so far today, it's dipped down, but it's trading fairly flat. But I think that's really the big level to watch for me. So if I was convinced the pound was going to go higher from here, I'd be a buyer with a stop loss the other side of that 13100 level. And I think for me, the only thing that would change maybe a medium-term bullish view from pound dollar from here is if 131 gets broken. And I think if that gets broken, then all bullish bets are off. And I think we'll see people panicking again and hitting the sell button and sort of more 30-year lows. But I can't help feeling that maybe after that massive move we saw on the Thursday and Friday of the referendum, and the fact we haven't really had that much follow through since then, that maybe everybody who wants to sell has sold already. But we'll see how this week pans out. But I think it's a bit of a difficult one, I think, still to call the pound, but 131 for me is the big level to look at. The other one we were looking at last week was euro dollar, and again I had a sort of similar view on euro dollar, that maybe we should see something of a recovery for euro dollar, and we have seen, I think, a gradual recovery over the past week or so, you know, since those referendum lows. If you take I mean, I was quite bullish on euro dollar before all the referendum stuff started. If we let's take a look back at maybe the longer term charts, you know, I think over the last sort of maybe 12 to 15 months, we've seen something of a base forming, I think, for euro dollar. We had that, we've had a couple of years of fairly steep declines. You can see from the 140 levels in May 2014 down to 105 sort of last year, March last year, and we have seen this 105 was tested again at the end of last year. And so for me, I'm still quite bullish on euro dollar, but let's take a look at the dailies, the daily charts, and really look at some levels to watch out for. There's clearly a lot of resistance to the big levels on the upside. The highs for the year, they're a fair bit away from where we are now, but this whole 115 to 117 zone, euro dollar just can't really last. It doesn't seem to be able to hang on to these levels for very long. But if we look on the hourlies, we do have, I think, over the last week or so, still just about, I think we've still got our a sort of gradual uptrend in place. If I take it right off the lows, so the referendum lows, to where we are now, and let's just zoom in a little bit again just to take out that big move and have a look at this trend a bit closer. There we go. So that for me is the trend in euro dollar, and that's clearly, we've been in an uptrend now for just over a week. And it's still pushing higher. It's still, it hasn't quite got back to where the levels we were sort of early last week, the sort of 112-y type levels. But for me, it still looks like a buy on weakness. It did sell off quite sharply towards the end of last week, but there was a fair bit of support coming in ahead of the sort of 110 level. So for me, it's still, euro dollar still looks like something of a buy the dips rather than sell the rallies, I think, in euro dollar. So for me, I think euro dollar would probably expect it to go higher, I think, in the days ahead. But let's have a look at gold, because this is again, times of trouble, the classic cliche, where do people go when they're concerned? Where do they put their cash when they're a little bit worried? It goes into gold. And let's just remind ourselves of the big picture for gold. It's not had the best of times over recent years. Since for 4 years almost. It had been in decline since those highs that we saw, those 1900 highs from sort of 2011. But there have been signs, I think, this year that it has been turning the corner. We saw it again even before all this referendum stuff sort of drove the markets a little crazy. We had seen gold moving out to its best levels for some time, and just today, as we're talking today, once again it's sort of pushing back up towards those post-referendum highs. So for me, gold, I'm a big fan of trying to identify trends and follow trends. For me, that trend in gold is up, clearly up. If we look on the daily charts, we could put our trend line for this year, something like that. We're in a clear trend there. So any weakness back to the 1200, 1250 zone looks like a buying opportunity. And if we look on the hourly charts and the slightly shorter term charts, we can identify maybe the latest leg of the trend that's only been going for a couple of days. But let me put our line in on there. There we go. So we've got our trend line there on gold, just sort of chugging up. So for me, any weakness in the price of gold still looks like a buying opportunity. And with big support on the hourlies at least, just ahead of the 1310 mark. But maybe the level to watch out for is the breakout through those referendum highs. When it got as high as 1360, 1358, 1360, and we're about $6 away from that now. It'd be interesting to see how it performs in the next couple of days, but it wouldn't be surprising to see the price of gold move higher still. I think the market that's maybe surprised everybody is the FTSE 100s. It has been an incredible week for the UK's sort of blue chip stock market index. We've seen the FTSE, just to remind ourselves, on referendum day, when the polls closed in the evening, 10 o'clock UK time, we saw the market push higher in the out of hours market, trading up to sort of 6,400. Then as the night wore on and we saw the sentiment swing and the vote swing, the market really tanked, and ahead of the open, it was trading down at sort of 5,700. We saw, massive volatility, something like 11, 12% swing overnight in the FTSE. And since then, the market has just taken off. Just to put this in perspective, where we are, I'm sure if you've been trading the markets for the last 12 months at least, you'll have known what we saw in stock markets last summer. We saw stock markets really fall off a cliff in August of last year when we saw worries about China really hit sentiment. But look at the FTSE. The FTSE over the past week has got back to levels that we haven't actually seen since the middle of August 2015. It's broken through what had been this massive barrier. 6,500 had been a real barrier for the FTSE. The bounce back from the China lows, then it sold off a bit. Of course, we had that terrible start for stock markets earlier this year. It rallied again into April, but again, 6,500 was the barrier, sold off, and we've taken it. So it's a really interesting setup here. I must admit, I can't quite believe it, how fast and how far it's gone in such a short space of time. But again, of course, as a trend follower, I'd have to be a buy. I'd have to say, well, okay, there's the risk that maybe the market has gone too far, but we haven't seen it come crashing back down. I think just this morning, I think in the out of hours market, it's nudged a little bit higher. I think 66.28, something like that, 66.30. I think are the highs that we've seen so far today. So it's come off a little bit since then, but for me the trend is still up. My background is technical analysis, and even though that trend line has broken, for me it doesn't necessarily mean the trend is over. I think if you sort of blindly stick to a trend line breaking and think, well, that's it, the trend's over, it doesn't really mean the market's going to reverse straight away. The first level that I would be looking at, I'm a big fan of looking at previous days highs and lows, because they're clearly, if a market hit a low then rallied yesterday, that was an important level yesterday. So I think for today's trading, that can be an important level to watch. So if we zoom in to sort of Friday's lows on the FTSE, here we go. So what we're looking at here, this is today, 4th of July, and then this is trading on Friday, and on Friday the market got as low as, let's just put a quick line on there. There we go. Traded as low as 6,500-ish on Friday. So it's trading at 65.58 now. It's hovering above the sort of Friday afternoon support around about 65.50. But for me, it still looks like something of a buy on the dips. The FTSE, even though it's moved 800 points in the last week, I don't think that trend is over just yet. I think if we start to lose the 6,500 mark, then it starts to look maybe a little bit weaker. But I think for now, there's a reasonable chance if we do sell off a bit more from here that we could see some strength coming back in ahead of 6,500. Let's have a look at the German DAX, the German 30, while we're on it. Here we go. We're going to see, I'm sure, a similar pattern to the FTSE, but it hasn't bounced back quite as hard. So the European stock market's clearly somewhat spooked as well by the UK's decision, the referendum decision to come out. It does throw some questions in there for the Eurozone, but the German market, the DAX, a similar sort of bounce back over the last couple of weeks, over the last week, sorry. But actually, if you look at it, there are some big levels that are proving to be a problem on the DAX. If we look at maybe let's look at a 10-minute chart just to capture the last few days or so. So the DAX has managed sort of to rally up to that 9,800 zone, but it's not really making much progress sort of past that. You can see here, on the 30th of June, so last Thursday, near enough 9,800. Friday, is that Friday? 1st of July, Friday sort of 4 o'clock, 9,800. And again, it looks like first thing this morning, this sort of 9,800, maybe a little bit higher, has been something at 9,800, 9,820 sort of zone has proved to be something of a problem for the DAX. So, one trading idea could be, well, if we see strength by the DAX back up to this sort of area, it could well be a selling opportunity with a stop loss somewhere above. And maybe we will see a bit of a push this afternoon. You can see earlier on this morning, about 9 o'clock this morning, 9:45, the DAX pushed down to sort of 97.25, rallied, has come back, and maybe we are just about holding above those morning lows. So maybe we'll see another push back up this afternoon. If we see, actually the US is shut, of course, this afternoon, isn't it? So maybe we'll have to wait till tomorrow to see what happens. We could be in for a quiet afternoon. But a push back up by the DAX towards this 9,800 mark does look like it could be something of a a selling opportunity. We'll see, but like I say, I think with the US being shut for their holiday, we could have maybe something of a quiet afternoon. But let's take a look at that. Let's take a look at the US market, because again we've got some interesting levels just coming up. So this is the Wall Street, this is the Dow Jones. Let's take a look at the daily chart. So the bigger picture, and if we zoom, maybe we'll go even further than that. Let's have a look at the weeklies and zoom right out, because again, of course, it has been dragged back up there as everyone panicked a lot less about what Brexit could mean. But we're in a really important zone. I think this again, this 18,000 mark. After last summer, the Chinese sell-off in stock markets, the Dow bounced back, and it was it's quite the bounce from sort of 15,200 back to 18,000. But 18,000 proved to be a barrier. Sold off again, moved back up again, and again couldn't really make much progress through 18,000. So as of in the out of hours market, it's trading about 20 points below that 18,000 mark. So it's clearly a big obstacle. And again up here, 18,360. I think these are the all-time highs up there. So this whole 18,000 to 18,350 area really is a massive one. And if we saw strength through here, it does suggest that these markets are off higher again. So I think we've got, in the weeks ahead, potentially another interesting summer for stock markets, with US markets within, 400 points of the high. So we're only, 3%, something like that, away from the highest point, 2.5%, 3%. So not much in it, really. We'll see what happens. But if we have a look at maybe a slightly shorter term view, let's flick onto the hourlies for the Dow, and let's zoom this out. We can see the size of the rally, and it's simple things. I've talked in the past about trend following, and looking for big levels. It's simple things maybe that gave us that can be used as sort of trading signals. So we had that bounce post referendum, then the market sold off a bit, and then it rallied, and when it broke through that sort of post referendum bounce from Friday afternoon, the market moves sort of 300 points higher again, not in a straight line, admittedly, but I think again we'll see what happens when US markets get back to normal on Tuesday. But the next obvious obstacle to watch out for is that that pre-referendum high around about 18,120, up at those sort of levels. So it does look like potentially there's scope for a bit more of a move higher in US markets. But it'll be interesting to see what happens when we get back up to those highs. And again, a couple of the levels I would look out for when trading starts again on Tuesday, the lows from Friday around about 17,900, proved to be something of a level. So if we saw the market maybe dip in early trading on Tuesday, it could be something of a buying opportunity with a stop loss the other side of 17,900. And we've also got the lows from later on in the session around about 17,925. So I think we've got, potentially for tomorrow's trading, we've got these areas of support to keep an eye out for on the Dow when it starts trading tomorrow. And maybe, and if we did see it slip below 17,900, I think we'd have to maybe flip then and start thinking about, well, we could be seeing the end of this surge that we've had over the next week, but over the last week. But for me, I think if we did see a slide back to these sort of levels, they were fairly pivotal levels back on Friday. Let's see what happens. Of course, later this week, we've also got the non-farm payrolls. So that's Friday lunchtime. So that's 1:30 UK time, so ahead of the US market opening. It's always a big one, the non-farm payrolls. Last month's payrolls it's the US jobs figures, the US unemployment data. It was a massive surprise. I think the market, from memory, was it expecting something like 300,000? I can't remember, but it came in at about just 35,000, I think, around about there. It was a massive miss. Anyway, so it was a big shock, the payrolls last time round. So we'll see what that's like. So that's this Friday. So Friday could be a volatile day, but we could well end up seeing Wednesday and Thursday being a little bit quiet ahead of that release as the market tries to make its mind up what the release is going to look like. We'll see what happens. So I think there are some obvious levels to watch there on the Dow. I'll be watching those. On the FTSE, I think despite that trend having broken today, it did push out to at highs earlier this morning. And for me, the big first level to watch on the FTSE are those lows from Friday around about the 6,500 mark. So for me, while the FTSE is above 6,500, it still looks like a buy, and I would be expecting it to push back up above 6,600. The pound against the dollar, I think, is still a little bit mixed, but the big level to look out for are those lows that we've seen over the last week, just ahead of 131. I think that's the big level. And the euro, even though it's maybe not the most volatile market at the moment, it is still within that trend that's been in place since a week last Friday. So for me, any weakness on the euro still looks like a buying opportunity. And finally, just as a recap, gold is an interesting one to watch because it's after sort of spiking much higher on referendum night, then moving sideways since then, it's starting to move again. And the big level to look out for is this sort of 1358, 1360 level. What happens when we get up there? If it does break through these sort of levels, you'd expect an element of short covering. People have been betting for gold to fall, getting out. People buying the breakout. So it's a big level to watch. I think that 1360, as we've had a sort of a period of consolidation since the referendum. And if we did break through, it would put it at its best levels since the 3rd of March 2014. So we'd be on another 2-year plus high if we saw gold break through that 1358, 1360 level. So I think it's an interesting one to keep an eye on. Like I say, US markets are shut this afternoon, so we could have a fairly quiet afternoon's trade now in Europe, but I think there are still opportunities out there in the days ahead. That's it for today's brief market outlook. I did another webinar with Aondo last Thursday on social trading. So maybe for those of you who know me from other places in the past, I've sort of started working with Aondo on a few things. And one of the things I'm doing, I think their social trading is really interesting, and that's where you follow other traders, you can see what they're doing, and you can set your account up to mimic their trades. So I think there's some interesting things that Aondo are doing there. And to find out more, if you don't have an account with Aondo, if you go to, there's a page on my website I've set up, and on there, I'll just send that to you now. So it's tradeafter.com. So on there's the video. It's about half an hour long, the video of the webinar that I did last Thursday night on social trading with Aondo. But for our market outlook, that's it. Things are a little bit calmer this week than they were last week. I think there's still some interesting opportunities out there, but maybe when the markets get back to normal tomorrow, it will be a bit clearer again. That's it from me. If you have any questions after this, feel free to, hang on, there's a few questions coming in that I've missed. Let's have a quick look. Aussie dollar, New Zealand dollar, someone's asking about. I don't think I've got that on my watch list. Hang on a second. Let me try and tidy my screen up a bit here so I can see what I'm doing and see if I can find it. I'm working on 2 screens, which is normally works fine, but I've got, there we go, add it to watch list. I've got a very big screen and a very small screen, and it's a little bit confusing. Let's look at Aussie dollar, New Zealand dollar. Let's bring that in. Here we go. So we'll take the pesky US dollar and the European situation out of the equation completely. Let's have a look at the big picture. So again, for me, when we're looking at charts, I always want to see what the big picture looks like. It's a bit odd, isn't it, really? So Aussie dollar, New Zealand dollar has been pretty well capped by 113, hasn't it, for a couple of years now. I suppose if you were a bit aggressive, I mean, for me, it's in the middle of that massive range. So we're slap bang in the middle based on the weekly chart. There's probably not, an awful lot to do. But I suppose if you had an aggressive view here, the trade to do would be to be a buyer, I think, wouldn't it? Let's have a quick look on the dailies, because it's had a little bit of a tickle through that level. Hang on a second. Would I? I don't know. Do you know what? I wouldn't be a buyer. I think I'm talking rubbish, because it's gone through that level. It's gone through that 105 level, and it looked like it was sort of forming a base ahead of 104, but it did towards the end of last week go dip lower. What I would do, if somebody said, right, you've got to do a trade in this market, I suppose the trade I would do, I would be a buyer, but I'd put a stop under that low from Friday, maybe even a stop and reverse. Yeah, so I'm going to take the view, okay, it's sort of broken below the support, but it has formed something of a base. But I think it's quite a difficult one to call, that, isn't it? It looks like, you know, because it's been trading in a pretty broad sideways range for the best part of a year now. I think it's a bit of one to call, but maybe, you know, maybe we'll see a bit of a squeeze higher, you know, back up to maybe 107, 108, assuming that low from Friday holds. We'll see. We'll come back to it. We'll come back to it again and see what it's been doing. But for now, for today, we'll wrap things up. So if you have any questions after this, I'll just give you my email. I'll flash up my email for you now. Hang on a second. Show my screen. Which monitor? There we go. So you can follow me on Twitter for market updates and charts throughout the day. My Twitter thingamajig is at Jones the Markets. If you have any questions, drop me an email, david@tradeafter.com. And to watch that webinar, that social trading webinar I did for Aondo on Thursday night, if you go to the website, www.tradeafter.com, it's there on the website. If you scroll down to the bottom of the page, it's about 30 minutes long, and it's all about, you know, how to pick traders, how to use Aondo's tools to see what people's track records are and stuff like that. But it's just coming up to nearly 1 o'clock. We'll wrap things up there. Thanks very much for joining me. I think we're doing this again next week. I think next week it's going to be on Wednesday, so it's going to be the middle of the week next week. So hopefully see you then. And up until then, I hope your trading goes well. Thanks very much.